Michael Burry is well known from the Hollywood film The Big Short, a story about him predicting the great financial crisis. Now, it's no secret, Michael Burry has been calling for the mother of all crashes for quite some time now. However, the difference this time is that Michael Burry has just made some major changes to his portfolio, which I will be sharing. Now, in general, I find it's much more valuable to take a look at what people are actually doing with their own money and not just what they're saying. Yes, he has been calling for a big crash for quite some time, but he's always had a lot of money in the market, so it's been a bit of a mismatch. However, recently, he has been closing out nearly all his positions, and actions speak louder than words. So in this video, we'll be looking at Burry's big allocation changes. I'll show you exactly what he's been doing with his own fund. There's also been quite an intense Twitter feud going on between Elon Musk and Michael Burry, and I'll show you exactly what's been going on. And then we'll finish with the question, would Michael Burry ever short the crypto market, as he's just tweeted about that as well. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, so Michael Burry's been calling for this big crash for quite some time, but what was a lot more interesting to me was what he's just done with his own money. Ready? Let's do this. So this was one of his most recent tweets, and this went out mid-November, and he's basically talking about the S&P 500's PE ratio, saying that right now it's 26, and Robert Shiller's PE is 39, and the chart below is the Shiller PE ratios. Now, neither necessary nor sufficient, but S&P PE ratios were 18 before the 2008 58% crash, but below he's actually given the Shiller PEs, so I'll base it off this for simplicity. He's saying that in 2008-2009 PE ratios were about 26, and that was just before a 58% crash. In 1929, PE ratio was about 30, and that was before an 80% crash. And then in 1973, the Black Monday event, it was about 19, and that was before a 48% crash. How earnings fell 91% in 2008 and 73% in 1929. So basically what he's saying is that PE ratios right now are historically really high. And this means either stock prices are too high or company earnings, their profits are too low. Well, we know company profits are actually very strong, so this indicates that the stock market is massively overvalued right now. And he has been calling this for some time. This was one back in February this year. People say I didn't warn last time. I did, but no one listened. So I warned this time, and still no one listens. But I will have proof I warned. And then this one mid-year. People always ask me what's going on in the markets. It is simple. Greatest speculative bubble of all time in all things, by 2 orders of magnitude. So it's no secret he's been calling for a big crash for quite some time. However, this is his hedge fund, Scion Asset Management. So let's take a look at what he's been doing with his own money. And this is how the portfolio looked at the beginning of the year. So this is Q1 2021. And you can see this is a very healthy portfolio. In fact, it's the value of $1.3 billion and made up of 31 positions. Now, yes, the largest by far was this big Tesla short. He had put options to the tune of $500 million. And also put options on 20-year treasury bonds. However, he also had some huge bullish bets. So call options are where you're using leverage, betting that stock prices will be going up. And this was also hundreds of millions of dollars. So call options in Alphabet, in Facebook, in Kraft Heinz, in CVS Health, NetApp, as well as a large stock portfolio to the tune of millions of dollars. So if someone was calling for a crash, why would he have so many call options and such a big portfolio? Well, we now have the data for Q3 2021. This has just come through November this year, and this is how his portfolio looks right now. And you can see a very different picture. And now it's come all the way down to just 42 million and made up of only 6 positions. And if you want a visual of the cutback, this is the portfolio quarter by quarter. So you can see by Q4 2020, he started making some huge bets. I showed you his portfolio Q1, over 1.2 billion. Q2, it went over $2 billion. But this is what has happened just now. He's pretty much nearly sold everything out. And now this is a portfolio of someone who genuinely believes that a big crash is around the corner. Actions speak louder than words. So yes, he has been calling for the mother of all crashes for quite some time, but he had more money in the market than ever before. Yes, his largest position was the Tesla short, but he also had hundreds of millions of dollars in call options as well. However, this has now all changed. Michael Burry is finally putting his money where his mouth is and sold up shop, and he's almost exited the stock market. And for me, this is much more of a legitimate warning than anything he said before. Remember, follow the money. Okay, next up, there has been a big Twitter feud going on between Michael Burry and world richest man Elon Musk. This revolved around tax and Tesla, and here is what's been going on. And it all started with Bernie Sanders, and he said we must demand that the extremely wealthy pay their fair share. Period. A cheeky response, I keep forgetting you're still alive. Want me to sell more stock, Bernie? Just say the word. He then went on to Twitter and did a poll. Much has been made lately of unrealized gains being a means of tax avoidance. So I propose selling 10% of my Tesla stock. And after 3.5 million votes, most people said yes, 58%. And he said, I will abide by the results of the poll, whichever way it goes. And he has now sold over $7 billion of his stock. And this is what it did to the Tesla price. As you can see, it was going on such a huge run. The tweets went out, it crashed the market, and Elon has been selling his Tesla stock. And this is when Michael Burry decided he had to chime in regarding what Elon Musk needs to sell because of proposed unrealized gains tax. Well, there is the matter of the tax-free cash he took out in the form of personal loans, backed by his 88 million shares at June the 30th. And then he dropped the link as proof. And then he said, let's face it, Elon Musk borrowed against 88 million shares, sold all his mansion, moved to Texas, and is asking Bernie Sanders whether he should sell more stock. He doesn't need cash. He just wants to sell Tesla. He said, just think about it. And he highlights that Elon Musk back in 2020, at this point here, had said that he thinks the Tesla stock price is too high. And then obviously this is what has happened since then. And then finally, Michael Burry gets very close to trolling Elon Musk. Elon said, I hope they're able to achieve high production and break-even cash flow. That is the true test. There's been hundreds of automotive startups, both electric and combustion, but Tesla is the only American car maker to reach high volume production and positive cash flow in the past 100 years. And then Burry drops a bomb. No, Elon Musk, the true test is achieving that without massive government and electric subsidies on the backs of taxpayers who don't own your cars. And Elon simply replied, Burry is a broken clock. And for anyone who doesn't get that reference, basically he's saying Michael Burry just makes loads of predictions and even a broken clock is right twice a day. Nothing like a good old Twitter feud between business titans to get us through the day. So, what do you think? Did Elon Musk just want to sell some Tesla stock and look like the good guy in the process? Okay, to finish up, Michael Burry is probably the world's most famous shorting expert. And the question is, would he ever short the crypto market? Well, he just so happened to mention this recently as well. He said, for what it's worth, I've never shorted any cryptocurrency. This is my third bubble and the biggest. I've learned a thing or two. 30-year treasuries, on the other hand, So I think what he's basically saying that even though he thinks crypto is in a big bubble, he doesn't have the kahunas to short this market, as he knows crypto could be going a lot higher. Michael Burry, the world's most famous shorting expert, has been calling for a big crash for quite some time. However, finally he's put his money where his mouth is and sold out of nearly all his stocks. And for me, actions speak louder than words. I think it's fair to say that Michael Burry and Elon Musk are no longer besties after this latest Twitter feud on Tesla and taxes. And although he believes crypto is also in a big bubble, I don't think he'll be shorting the crypto market anytime soon. So there you are, guys, that's a wrap. What do you think about the latest moves of Michael Burry? Let me know below. For now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed to the channel, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.